The Edgeley Swordsman here. It's July 13th, 2022. Uh, I find myself doing more and more videos, the more, I don't know, hand holding that is apparently needed, I guess. This is a tweet from Willem Middelkoop. He's the fund manager of the Discovery Commodity Fund, who states, "We have been through investment cycles. We have been through a few investment cycles. Recent interactions with investors give a clear bottoming sign. If history is any guide, this brings a huge buy signal for smart commodity investors. We expect a 70% plus rally within 12 to 18 months, just like 2009, 2016, 2020. Uh, so this is an old cat who has seen it all before, and obviously has investors he can talk to. He's obviously talking to companies, obviously talking to brokers, mining companies, whatever. So he's probably got a much better pulse on just how bad sentiment is, relative to most of us retail guys. So it's like, you can, I mean, from a contrarian indicator or a sentiment standpoint, that makes total sense. I don't have a way to gauge every investor's sentiment, or mining companies, or brokers or whatever. So I just look at how cheap things are. That's my only driver, really. I don't buy anything because I think sentiment is bad enough, or for sure there's going to be a bottom anytime soon. I buy whenever I find a stock that I think is dirt cheap. I buy it and I hold it and hold it and hold it and hold it. And typically, unless you tag the exact bottom, I'm gonna be down, because I start buying typically when things are in a downtrend. And if I don't tag the exact day of that downtrend, I'm gonna be start off being minus negative territory in any stock I purchase. Other news: breaking 5.35 million Troy silver bullion ounces have been withdrawn from the COMEX registered category. The registered category for silver is now in total sitting at 62.78 million Troy ounces. So it's not 10%, but what is that? Around 8%, something like that. So 8% of the registered COMEX bars went have been withdrawn. So I mean, you can tangle with the paper prices of metals, etc. And the easiest one obviously would be probably gold, because there's gold doesn't get consumed. Silver 50% is consumed. But it's like the smashes, they have real impact in real life. So this would suggest that yes, the silver price is too low, and somebody is seeing that and is taking out silver, or maybe demand just requires more silver. Whatever the reason being, that if you smash something that is way below the equilibrium price, for example, where demand exactly meets supply, you're probably gonna have more demand than supply. So a net withdrawal. This is what I keep talking about. It's like all these extremes you're seeing, the dollar ramping, everything turns to crap basically, miners selling off. Nobody wants to invest in the mining sector there. If you saw Robert Friedland's presentation, which I put up on the site, he highlights the fact that we're gonna need a lot more metals. We're gonna need to find a huge amount of metals and mines in the future. So time is on our side. And the worse it gets now, the less capex is spent, the less people go out and look for metals, etc., etc. What's going to happen? Supply is going to get even worse. So even if you have the exact same demand picture, prices are forced to rise because the supply isn't going to be there. So the more frustrating, let's say, this sector is, or the crappier it is, every future mine is going up in value, implied value. And here's someone who shows the registered COMEX inventory. You can see minus 5.35 0.35 million ounces here. That's not a small withdrawal. Then just on my last video, some comments. Individual sentiment for this sector is starting to drop. I mean, yeah, I would think so. That's exactly normal or natural. I mean, preferably you wouldn't even have that feeling, because you would be, thinking less about where we were yesterday or where we're going to be tomorrow, and more of what's going to happen when we go up here again. But I understand that. I mean, it's very human too. I mean, it's very, very hard for anyone not to be frustrated at extremes. Or, I mean, it's hard to not be super bullish or happy up here. Same, it's almost impossible to not be frustrated at these bottoms. So that comes with the territory. It don't give me much comfort that there are so much opportunities in the market when I've already sunk all my cash into these large miners when I thought it was cheap, but now I can buy them for half the price. Also, the Oilers have been crushed. I'm close to selling them to take small profit, which is back now before they also go into red. My phone is giving me alarms all the time. With share prices falling below my original stop loss limits, and I almost cannot concentrate on anything else when my portfolio is losing month of salary in a few hours and people are joking about it. Well, I mean, the first thing I guess is, also the Oilers have been crushed. I'm close to selling them to take the small profit, which is back now before they also go red. Nowhere in this comment is there any hint of what the price to value gap is. I have no idea if I'm assuming Oilers are cheap, etc. Even with today's decline in oil, for example. But this is basically momentum trading. I better sell now before they go lower. And sure, if that's your strategy, do that. I don't really care what the price trend is, etc. That's not an input for me, really. I look at what I think something is worth, and if it's low, a lot lower than what I think it's worth, or what I think it will be worth, since I'm typically into high growth stories, I'm forced to buy, because those are my only conditions. Buy something that's cheap and then sell if I find something cheaper. That's basically it. Stop losses, I don't use stop losses. Hard to concentrate when my portfolio is losing. Yeah, but I mean, I don't know how old you are or anything like that, but I can almost guarantee that I'm down a lot more than you on paper last 6 months, let's say. And I'm pretty much, all in all the time. But that's how you are wired. It's like I'm kind of used, because I think I know what I'm doing. I'm comfortable. Like I know exactly why I own them right now. I know exactly why I'm not selling. So I'm optimistic about the future. I think we're in a good spot here. And the past is like a non-issue. The past is the past. You can't change that. You're not investing backwards. You're investing forward. So even if you, in hindsight, of course, would have wanted to sell every top, that's impossible. So it doesn't matter where we've been. The only thing that matters is where we are heading, or where we are going to go eventually. Rick Rule, I found an article and I thought he had pretty good. I mean, on that subject, one of the things that I've learned in my life is that if you don't have an opinion on a company or an asset's value, the price information isn't worth much. Knowing that a stock is selling for $1, $2, $10, or $100 is irrelevant if you don't know the company's value. Most people pay attention to price. The stock is at 56 cents, 67 cents. Who gives a shit? If you don't know what the stock is worth, who cares what it's selling for? That's pretty much on that point. If you have if you don't know why you should beat the market or win, then you're just, subject to the wind, let's say. You're just a leaf blowing in the wind. when it goes up, you just think, I think it's gonna go up, and you have no idea if, or little idea if what you own is like, yeah, it's super expensive already. And I mean, we've seen that in crypto and tech, etc. I mean, things can go up for years, even though they're already nosebleed overvalued. Like, should be down, I don't know, 90%, 95%. They can still go up, but people don't buy them. Those trends are strong, but people buy because they have been going up and they think that they will go up more, and more people that sees that buy in and further pushes it up. So it's a self-fulfilling prophecy, and that's why you have, I mean, right now, for example, in the junior space, this is not a functioning market. The junior mining sector, it's not a rational price setter right now. You can forget about all that. Nothing makes sense right now. Nothing makes sense. So it's like, you just have to trust me on that. It's like, why do they get so overvalued? It's not because the market is rational. It's because there's a strong trend in place. And you can see that. It's like, yes, this sector. I mean, one reason I like this sector is because I would consider it one of the absolute hardest sectors there is. Because if there's something that's very hard for humans to deal with, it's volatility and the emotions that come from volatility. It's very hard to sell high. It's very hard to buy low because the trends are so goddamn strong. But if you look, it's like typically you have the grinding movements are very long, especially into a extreme bottom, let's say. But the rallies, I mean, they are quite short. They're actually quite short. The downtrends are last for typically a lot longer, and then you have just spurts, let's say, now and then, maybe once every year or every 2 year, whatever. But you also can have, like, this was the global this was pure capitulation all the way down to a bottom. So we have had a much more grinding bottom. But it's like this market is like 95% frustrating and 5%. I mean, I don't know what Bear Creek mining is worth. Maybe it's actually worth, let's say, this. So it's like just a few times every decade does the price actually match fair value. Rest, it's in la la land one way or another. And that's why, again, it's like the funds typically say, and all the successful investors like Warren Buffett and Peter Lynch, etc. I mean, many of they say that, or might have been Monish Pabrai, who said that's like the average time it takes for one of his news stories or whatever to perform is like 3 years. So he buys something that he thinks is extremely cheap, and on average, it's not until 3 years later where he actually gets paid. So it's, I mean, when you think about it, and then you add in this kind of sentiment, so it's like, I think the value of a junior is a magnet, and price can diverge from said magnet for a long time. I mean, back here I was thinking of buying a new apartment, and then the juniors went down, so then opportunity cost came up. So it's like, I don't know when I'll actually buy a new apartment, but it's just because it got too cheap and kept on getting cheaper. So no way I'm not too keen on selling out this, because I'm not gonna find an apartment in a relatively hot housing market still, actually. That's gonna. I mean, the housing market is not gonna go up 300% within 2 years. But something like that is what I actually expect from, or 300-400% is what I expect from my portfolio. But I don't know when. I just know we're gonna get to this place sometime, and that's what keeps me in the game. I know what I own is very cheap. I know that we're gonna hit a sentiment high one day, and that's why I think it's extremely costly right now to sell, and it would be even costlier if we go down here. Again, Great Bear, I've used this many times. It's like you cannot avoid 30, 40, 50, 60% retracements. Even in the best stories, you cannot avoid it. Either you have to start sucking it up and actually ha- begin to have the fortitude uh, to suffer through these corrections, or you should go and do something else. It's like at some point, I, if you're constantly complaining, let's say, I mean that's just a big tell that you don't really know what you're doing or why you should make money. You have no idea where you are. You have no idea where we're going. You have no idea why you should win. You don't even really have a strategy. So it's like if you find yourself just complaining about things, I mean, I don't think you're gonna beat the market. I'm sorry. It's like nobody can hold your hand every day for the rest of your investing career. But you can take a look at any of the success stories or just how sentiment works and how the sector works. And it shouldn't take that long to figure out that there are some patterns here, meaning that things go up and things go down. Even the best stories, they go up, they go down, they go up, they go down, they go up, down, up, down, up, down, up, down. So if you're lost all the time, it's like you have no idea why you should be buying here or here or here or here. Or maybe even selling up here, who knows? I don't remember how expensive actually Great Bear was, but if you don't have a plan why you should win, why should you win? That's basically what Rick Rule says. If you have no idea of what you think something is worth, what does price tell you? Nothing. You're just a momentum trader. I'm buying because things are going up and I'm selling because things are going down. You're never going to be a value. I mean, the whole notion of a value investor, for example, like in my case, is because I have an idea what I think something is worth, or more specifically, what I think something can be worth, and I look at the price today I'm paying. Take Goliath, for example. Our buddy Aaron here, Goliath Research reports good real results yesterday. They have now hit on 25 out of 25 holes so far. Good stuff. Stock plus 15 on news yesterday. Today minus 11% on big volume. It wasn't that big volume actually. But so he's frustrated obviously. It's like, well, why can't even with superb results it's up around 4% in one day. And that's not, what's that in valuation, maybe 2-3 million. So I mean that's what I'm saying. It's absolute bullshit. You have to accept that this market, this is not a functioning market right now. Nothing in the junior space makes sense. Absolutely nothing. So price is like, I don't really care about price because it's so ridiculous anyway. It's like Goliath should not be down here in the first place. Maybe it should be up here already. And the news maybe should have brought it up here or whatever. We're obviously not there. So why am I, let's say, why am I chill about it? Because I understand it. I understand there are no buyers now. It's only retail in this sector, basically, and there's no retail buyers around. And today, for example, to be specific, today shares of the recent placement got free trading. So basically, like in my case, for example, I participated in the private placement, so I may now sell those shares if I want to. So they were locked up. So there was I don't know how many. I think there's pretty much mostly strong hands involved, but it's like they couldn't sell those shares from yesterday or today. They can sell those shares. So I think there's just people who had shares locked up, and you got a warrant, etc. So some people like, yeah, I'm scared, whatever. I still got warrants, so I'm gonna sell some. It's like, and the volumes are kind of low still. So I mean, if I would just dump my position from the private placement on the stock, I think, I mean, in one go, I think I could bring down the stock like 20%. Would that be rational? Is that a functioning, market? Or whatever? No, but maybe who knows? Maybe I was gonna buy a house, or I got panic. I panic sold. Thousands of reasons. But there's simply no buyers to keep this market honest, and that's how it is. But the thing is, and you can see this in, I've seen some juniors up 30-40% in the last 3 days on minimum volume, a few $1,000, and they can move 20%, and that's what I mean by it's like I have no idea when we're gonna get this, but it's like there is no rational person that is selling down here. Smart money is not selling down here, and one day almost every share is going to be held by smart money or strong hands. And they will not be selling down here. They will not be selling here either. So as soon as some buying comes in and then we start to form a trend, maybe they'll be selling up here, whatever. So it's like, this is how you can have these, all of a sudden something just flips and it's like a rocket up. Because there's no sellers. Every seller is out. Anyone really that thought of selling down here, they're out. So no selling, so any incremental buying has a very easy time to make the shares go up. So it feels like we're, gravity's down. It feels like, we have a big lead balloon, let's say, the price is very heavy. Yes. And that grinds people out. So people are selling every day now. People are selling the longer this continues, which means one additional buyer for when things get better. So we're grinding out everyone, and that's why I have these jacks, basically spurts. All of a sudden something just changes because there's no selling pressure anymore. So maybe in a small micro cap, maybe $20,000 worth of buying power jacks a stock up 50%. I don't want to miss that because I think they are, or I know we're going to go to a sentiment high one day. And again, Goliath, it's like they put out, they just keep on surprising to the upside, and I don't give two shits about what the price is doing today or tomorrow, the next day or whatever. I think that the fundamentals at the end of the day, within maybe, after this field season actually, somewhere around here, I think we will have an idea that they might have, 4, 5 or even more million ounces with a lot of blue sky on top of that. So what do I think Goliath could be worth one day? Maybe $1 billion. It's at 60 million right now. Why on earth would I sell Goliath? We're not even close. If Goliath alone does, fundamentally wise, becomes somewhere along the lines of what I hope it will, and we go up into the next sentiment high, I think Goliath alone could basically make up the whole portfolio I currently have. So that alone could, if just Goliath works out, I think that could, save the whole portfolio. Every other holding go down to zero. Kind of same with SK actually. SK has one of the longest runways I know of because they have so goddamn many targets, and the TVGF alone might, who knows, at the end of the day, maybe 5, 6, 7, 8 million ounces. Scarlet Ridge looks as big. They're going to be testing that. So after this field season, maybe somewhere around, I don't know when we will get all assays. I think the assay labs are actually a lot quicker this year. So maybe here already in we're July, maybe in January, February, we will have an idea. They will have drilled over 30,000 meters, I think. If they have some good hits, I think they're gonna have good hits around the TV area at least. If Scarlet Ridge hits, who knows how big it can get. I simply think my base case is that SK Mining will someday have over 8 million ounces of solid grade to high grade, potentially even bonanza grade if we actually find an SK Creek type horizon, and I think they can still be growing for years. So I think personally that SK is going to be one of these. and I think Goliath is one of these. I think Allure is one of these. I think at the end of the day, this one might be one of the, confirmed one of the largest systems in the world. I know Crescat has like a risk-adjusted base case of around 64 or maybe 67 million ounces AU equivalent. The share is trading. The company is valued at 225 million. I think Eloro could make up my whole portfolio one day if that alone worked out. Novo, I started buying Novo here. Had a big position going into this, and then I had to sell because I kept my portfolio size at 30%, and then I started buying back when it went lower to stay with a very large holding. And I actually think I went. When was that? I was all in. Yeah, here I actually went all in. So I actually got, like I said in the last video, too greedy. Bam, bam, boom. Obviously not performing well. I mean, even despite that, every good story goes into corrections like this. We've had several disappointments in Novo. So you can't just say that it's sentiment alone. The story has not worked out so far as I hoped, that's for sure. Now it's dirt cheap. Where will Novo be in 1-2 years? I don't know. I just know it's dirt cheap now, and I'm hoping that the Eric Sprott sale goes through. In that case, most of Novo's projects, including the mill, would pretty much be for free. So I have no intention of selling down here. And again, it's like, if something good happens, if they make a discovery at Hemma or Malmsbury or any other target or some nickel, or get Beedens Creek sulfides into operation, and that actually works out, maybe I'll get a multi-bagger from Novo from these levels. Nevada King keeps on drilling, very cashed up, very aggressive. I think they're gonna grow and grow the Atlanta gold mine. They might hit at Lewis or Iron Point, perhaps, but that's not priced in, so that would be a bonus win. They have a huge land package, so I'm just, it's a clear growth hodler in my, most family portfolios. Snowline, I don't know how big this could get. Blue Sky is obviously over 10 million ounces, and if I hold it long enough, if I get even close. And the thing about why I like runways and high growth stories with long runways is that if Blue Sky would be 2 million ounces, you would need to be quite, precise what value those 2 million ounces would be. But if I think a base case is like 5 million ounces, that's already a lot. So even if an ounce in the ground in whatever area should be worth 50, 75, or 100, 150, or even up to $200 per ounce. That's a wide spectrum. But if the runway is long enough, they might hit 10 million ounces, for example. And same with SK mining. So I would lead even less precision, because if an ounce in the ground should be worth 100 and I thought it should be worth 75, so that's me 25% off. If they double the ounces, I'm gonna get an even more positive surprise anyway. So the longer the runway, the larger the target, etc., the less accuracy you need on a per ounce basis. Cabral Gold. Okay, let's fast forward a year or two. Maybe they have the oxide blankets into production, 3 to 5 million ounces at least on the books, versus a market cap of, 30, 35 today perhaps. Yeah, I think risks are very much to the upside. And again, if we just fast forward these, let's say we assume this is a risk adjusted case, so we say this is the absolute certainty from a theoretical set standpoint. What is a producer with 3 to 5 million ounces gonna trade for? 30 million? I don't think so. What's 67 million ounces of AU equivalent for Elora gonna trade at 200 million? I don't think so. If SK has over 8 million ounces on the books, in the future in British Columbia, high grade. Is that going to trade for 300 million? I don't think so. If Goliath has 5 to 10 million ounces in 6 to 18 months, do I think Goliath will be worth 67 million or whatever it is? I don't think so. So I'm setting myself up for upside surprises all over the place, and again, in some of these cases, even if one story actually works out, if that's a 5% position, and that 10 bags, that would be 50% of my portfolio. If it 20 bags, my whole portfolio. And given where we are right now, and if we include like 300-400% growth potential, and then we include the fact that from these lows to the highs, any ounce in the ground will be valued at 300-400% higher. Yes, you can get 20 baggers in a few years. Yeah, I-80 Gold, I mean, another example. They put out 19.8 grams per ton over 33.2 meters in southmost step-out hole at Ruby Hill. Stock up 0.9%. I think the sunk cost of all their infrastructure, etc., is if they would redo that today, I think it would cost more than 519 million. I just wanted to play this clip. Peter Lynch, be patient during a market correction. I mean, let it sink in what he's saying here.
October has always been a special month. I remember in 1987, I was very, I was very convinced that the market was not in trouble, and I didn't worry about things. And Carol and I had planned this great golf vacation to Ireland, and we're going to visit one course and stay at a little house, and visit another, go all along the west coast of Ireland and play golf. And we left on a Thursday night, and the market went down 55 points that day, which was not too good. And the next day we got to Ireland, because of the time difference, we'd completed our day, and I got back to the hotel and I called in. The market had gone down 112 on Friday. And I said to Carolyn, I think if the market goes down on Monday, we're going to have to go back. And so we stayed there for the weekend. And on Monday the market went down 508 points, and my fund went from I think 12 billion to 8 billion, and that gets your attention, in two working days. I said at the end of this week I'd be have no fun. Now there wasn't a lot I could do. I mean, here I was on Monday, because the market didn't open. By 12 o'clock it was in Ireland. It was still 7 o'clock in New York. So we did spend that day, and we played around golf in the morning, and then we went somewhere and sort of watched the market deteriorate. And I did come back. There wasn't nothing I could do. I mean, just nothing I could do about it. But I think my shareholders, they called up and they said, well, what's Lynch doing? They said, well, he's on the 6th hole, and he's, he's even par up to now, but he's in a trap. This could be, this could be a triple bogey here. This could be a big inning. And I don't think that's exactly what they want to hear. As though I could do something about this damn thing. So I came back home and suffered with everybody else. And fortunately, I was very consistent. The market went down when I ran Magellan. On 13 years, the market went down 9 times, and every time the market went down, Magellan went down. I was 9 for 9, and because it's very important. This is another one of these numbers you ought to write down. If you put $1,000 in a stock, all you can lose is 1,000. I've done that several times, and but if you're right, you can make 5,000, 10,000, 20,000. So this business, you don't have to be right 1 out of 2 times. You can be right 1 out of 4. It's a long time. The times you're right, the company's doing well, they're doing a great job, and you add to it, or at least you don't sell it, which is a terrible tragedy. So you can make more money on the upside. So I just wrote those out, and I will now flip a coin to tell you where the market will go to 4,000 this year or next year.
Yeah, so I mean, he makes a lot of good points, and this is a man you should listen to, obviously, because he was one of the best He was one of the best investors ever. And he had great returns, even though he was managing, billions of dollars. So it's like, what did he say? He was out playing golf. The market started crashing in 1987. And like you said, I mean, it's not like he could do anything about it. And these corrections just happen. Like you said, He writes these out. Because as long as the company is intact, things are going to work out in the end. And you make more on the upside than on the downside. Because a stock can only go to zero, but it can go up a lot. And it's like, to an additional example, where he says, a stock could go up 1,000, 2,000% or more. Okay, how does that happen in the mining space? That takes time because you have to drill. I mean, that takes time for any company really. So what's the lesson here? If you want to offset your many losers or whatever, you want a few winners at least, and not too many, because if you have one great bear, that could have saved if you rode it to the end at least, I mean, that would be 10 to 20%, or 10 to 20 bagger. If you bought after the discovery, it's like, I don't know, $1.50 up to $28. It's like, that alone, if you rode that, could save the entire portfolio. But how are you ever going to get these 10 plus baggers if you cannot hold a stock for more than 6 months or a year, or sell it every correction? It's impossible. How am I gonna get a 10 bagger in SK if I can't hold it for 1-2 years? How am I gonna get a 10 to 20 bagger in Goliath if I can't hold it for at least a year? But still, people look at the market volatility right now and they get affected by it. Did anything change for Goliath, let's say, if silver is down or gold is down, or gold is up or silver is up? I think what matters more is the fact that if they multiply their value over the coming 6 months, I think that kinda trumps if silver is down 1 or 2%, or $1-2, or gold is down $50. What the companies are actually doing is going to affect the value of the company a lot more than what gold or silver is doing. And one day this will all be reflected. It's not going to be now, because the sentiment is too poor. So now it's rigged against us. Good news does not get priced in. And wouldn't you know, that's where the opportunity is. You can buy stuff that obviously went up a lot in value, which will be reflected one day, without paying anything for it, not even taking the risk. So I mean, I don't even know how I could lose in this market. This is too easy. You don't even have to make an estimated guess of what if the news will be good. You can just buy it after the fact. It is ridiculous. So the same reason why everyone is so frustrated about this sector now is why it is also one of the easiest markets if you really understand it. If you really understand sentiment. If you really grasp the fact that everything changes, if you really get that everything goes from low to high to low to high forever and ever and ever and ever. And if you are a value investor and realize, hey, I can steal an enormous amount of value without taking risk and I'm not even paying for it, how on earth can you not see that as an opportunity? But if you're complaining all the time, it means that, I mean, we all have our, moments of weakness, but you don't fully grasp what's going on here. You don't realize why this is an opportunity. In hindsight, everybody's like, yeah, I wish I bought this low. I wish I bought this low. Here we are again. And no one is going to buy this low. This is, again, this market is not rational. This market is brain dead. So if you have some brains, you would realize that, hey, this market is actually brain dead. Nothing makes sense right now. I can steal an enormous amount of value, which makes no sense. I mean, some of the news you see today, for example, if we would be in this environment, or in a 2016 environment, some of these news items, which leads to no reaction today from already absurdly low levels, could see, a 30% rise. Because that's what sentiment does. People dare to take quote risk. They buy. They are greedy. Now nobody's greedy. No, nobody even dares to buy something that is obvious because they're too afraid to buy it, because they fear that price has not bottomed yet. Everybody becomes a bottom picker at the bottom, and nobody picks the bottom. Everybody ends up selling out and buying back way higher. So I'm gonna go for this. Is gonna be my since I made a promise. I'm gonna be buying every single bottom for the rest of my life. Pretty much. I mean, as long as I invest. I bought this bottom, I bought this bottom, I bought this bottom. I'm not gonna miss this bottom. I can't. I gotta continue my streak of always being the last man standing and always being buying low. So I'll have these kinds of returns, and since I'm in growth stories typically, that means that the next lows are higher lows, so then I can afford the next 50 to 60% correction, because I won't be selling that low either, and then it's going to be up 300%, and then I'm going to have a 50% correction again, forever and ever and ever. Do your own due diligence, make up your own mind. I don't share your profits or your losses. Some companies I mentioned, a lot of companies I mentioned are banner sponsors, so do your own due diligence. Just don't buy anything if you don't understand the case, or just because I own a stock, etc. You always have to know why you buy. Why is it cheap? Why am I gonna make money on this? What is the value? What is the value in 1 year? What is the value in 2 years, etc. Hit the like if you like this, and stay strong. Bye.